Welcome back to my monthly report where I run through the Hamilton residential real estate market activity, this time with the March 2024 update. We've seen some interesting trends that signal both growth and cautious optimism in the market. So let's start unraveling what these numbers really mean. March ended with the median sale price in Hamilton reaching $750,000, marking a subtle yet notable increase of just over 2% from the previous month, and an encouraging 6.5% uplift from the end of 2023. While this growth is strong, especially in the context of recent market conditions, it still falls short of the historical average, where we typically see a jump of just over 10% over the first quarter of the year, so slightly tempered from normal. This year's increase of just over 1% from last March, however, does suggest a market that's been cautiously rebounding, but on the optimistic side, it stands as only the second month since last August where we've seen a month close out higher than the same month of the prior year. March did bring a noticeable shift in the median days to sell, with the typical home spending 17 days on the market before selling. This is a significant decrease from February's 28 days and marking the lowest number since last July. It's a clear sign of increasing decision-making by active buyers, aligning exactly with last March's pace. Now, the months of inventory in March trended down to 2.2 months from February's 2.4 and January 2.9, moving far away from the recent peak of 4.6 months that we saw in October of 23. While we're observing a tightening market compared to the last few months, this inventory level is still higher than last March's 1.6 months of inventory, suggesting a market that's still not nearly as tight as we've become accustomed to over the last few years. Also, despite this downward trend at the start of the year, the reduction in months of inventory hasn't been as rapid as historical averages would predict over the first 3 months of the year. So with March traditionally marking the lowest months of inventory number for the year, it remains to be seen if this pattern will continue. Now, in a bit of a twist, March saw a total of only 618 sales, marking the lowest number for the month of March since before 2014, which is as far back as I can look in the data. So it could be longer than that. So despite a slightly brisker start to the year, this January and February compared to last year, this momentum definitely did not carry into March. The sales volume not only fell short of reigniting that trend of increased activity, but also performed even slightly slower than last March's figures. This deviation raises a crucial question for market observers and participants. Will the rest of 24 mirror the subdued market of 23, or will we witness more of a resurgence in activity like we did in January and February as the year progresses? We shall see, and it is highly likely to be dependent on a rate cut. But could something or anything else spark a change as well? Now, turning our focus to new listings, March witnessed an uptick with 1,057 new properties hitting the market, up 17% from February. This increase, however, contrasts with the typical market behavior for this time of the year. While February experienced a surge with 10% more new listings than usual, March took a step back with 10% fewer listings than what's usually seen in the month of March. This shift could be attributed to sellers holding off in anticipation of potentially lower mortgage rates later in the year, and the anticipated link in increased demand from buyers that comes with it. Now, the sale to new listings ratio in March remained steady at 58%, following 57 and 59 in the first 2 months. And this indicates a balanced market, a notable shift from the frenetic pace of recent years. The average ratio for March historically stands at 71%, peaking at 86 in 2017. So this is the lowest March as far back as, again, the data would let me take a look. Now, March concluded with a total of 1,347 units on the market, which was an increase of 300 units compared to last March, and marking the highest inventory level for this month since 2019. So far, we've had a 25 to 30% more inventory each month this year than typical for the early parts of the year, highlighting a distinct trend for 2024. So this expanded inventory trend signifies a market with more options for buyers and also presents a bit of a challenge for sellers who are obviously facing more competition, yet not falling prices. So as we look back on the real estate market's performance in March, we kind of recognize a landscape that's gradually finding some equilibrium, but still perhaps quite susceptible to an upsetting of the apple cart with even the smallest of some economic shock. The fundamentals we've observed indicate a market that's more balanced than in recent years, marked by steady, if not spectacular, price appreciation from the end of the previous year. Now, this balance presents a unique scenario, one that I just touched upon, and that is a period that could be advantageous for buyers, as advantageous as it's historically been and may be for a long time, without significantly compromising sellers' prospects in both the nearer and longer terms. This is very much the same way I saw things at the end of February. So that's the wrap up for March. I'd love to hear your thoughts. Do you see this as an ideal time to make a move, or are you planning to wait and watch how the market evolves? Share your strategies, questions, or insights in the comments below, or wherever you see the video. I'd love to hear and read them and would really appreciate your time and engagement. So for more real estate insights and market forecasts, make sure to like, subscribe, and hit the notification bell. Your engagement definitely keeps me motivated to bring you the most accurate and timely analyses of the Hamilton real estate market that I can. And for that, I thank you very much. Have yourself a great month of April, and we'll see you in early May. Take care.